Alright, first I will cover ASML. So revenue, actually if you look at year over year, revenue is only up 1%. It's kind of flat at the moment. So if you look at net income, it's also flat. So at least year over year is flat. So it's about 2 billion euro dollars of earnings for this recent quarter. Then if you look at free cash flow is also 263 million. It's very low. But remember, for a company like ASML, right, their free cash flow numbers is very volatile because it depends on the timing of the deliveries of all these EUV machines, right? And one machines could be, like 200 million euros to up to maybe 400, 500 million euros. So it's very expensive. And so the timing of those delivery, right, will affect all these numbers like free cash flow, cash flow from operations, and so on, right? So it's very hard to see. Usually for free cash flow, you might want to look at, let's say, like trailing 12 months to look at long-term trajectory. So for now, I think it's kind of like May kind of numbers if you just look at the revenue, income, and free cash flow. And if you look at free CAPEX, right, CAPEX also looks a bit like nothing much. It's only like 300 millions they spent on CAPEX. We haven't seen like a lot of CAPEX investment to expand their capacity, right? If you just look at the numbers, nothing fantastic, nothing fanciful here. But if you just read through the earning transcript, right, I think the managements, they are trying to convey the message that right now their supply chain is a lot more ready to expand. So it's just like once they receive a clear message or clear order, right, then they can expand more easily as compared to a few years ago when they had a lot of all this supply chain bottleneck, right? So right now I think they have the flexibility to expand. It's a matter of the orders. If you look at the price earnings multiple, I think right now it's at 34, right? This is forward PE. So 34 level, I think it's not too far away from, let's say, like 5 years average, right? But if you look at the jump from around 27 up to close to even 40, right? I think that was after Intel announced some good news, right? Because I think for ASML, their big customer definitely are like customer like TSMC, Samsung. These are like their big customers, right? So the one that is like whether they will expand a lot is the question mark, right? It's actually Intel, because let's say if Intel, they say that they are really stopping all this semicon manufacturing foundry business, they just go all in on just design only, right? Then it is quite bad for ASML because that is the one that determine their marginal sales, right? Because let's say for TSMC, Samsung, I think those are all priced in already. That's why when Intel announced some good news, right, talking about partnership with NVIDIA and then some investment into Intel. So as long as the foundry business remain viable, right, then at least there is some upside for ASML. That's why there's a bit of a jump there. Then now normalize a bit, then stop at 34 forward PE. 34 forward PE, I would say reasonable. I wouldn't say it is like cheap, but remember these companies, their forward PE is always traded at a premium given that they have a monopoly power in lithography, right? So I think that's the thing about ASML. Then in terms of the numbers, this is one I'm taking from App Economy. So there's some good news here. Say for example, like the bookings, right, remain robust at 5.4 billions in the recent quarter, and then that's also driven by a massive 3.6 billion euro in new orders for its most advanced EUV machines. I think this one right now, EUV machines, there are two, right? So there's a high NA, there's a low NA. So I think that they have good tractions even on the high NA one. So I think definitely those are good news. And then I think companies just reaffirmed that the full year 2025 guidance for 15% revenue growth and 52% gross margin. And then they also said that for 2026, they don't expect the revenue to be lower compared to 2025. So I think that one is not like a clear full guidance, but it's a bit like signal saying that, okay, what they are seeing is that business remain good at least for 2026. But the things which they guided also, negative stuff, right, is that sales to China are expected to decline significantly next year. So this one, I think they mentioned it even previous quarters already. Now they just reiterate again. So next year, when you see that sales to China slow down, right, so don't be surprised because they already provide this kind of guidance, right? So I think they have good insights in terms of sales next year, because for a company like ASML, right, from the time they receive the order and then they build their stuff and they deliver it, right, it's not like within months, right? It's actually quite long one, could be more than a year one. When they give this kind of guidance, they already saw the bookings and they already saw what is inside their inventory and stuff, right? So they can provide this kind of signal. So just don't be worried when that happens. So in terms of their numbers, I would say that their numbers always looks good one. You can see, right, the net sales is 7.5 billion and then net profit is 2.1 billion. So for a company that just received 7.5 billion in single quarter, they are able to generate revenue of 2.1 billion. And these 2.1 billion, I think bulk of it actually will go back to shareholders in the form of dividend and share buyback. In terms of their capex, it's actually a lot lesser as compared to companies like TSMC, which we will cover later. So that's its financial numbers always looks good. And then in terms of positive signals or positive message that I try to pick one or two usually from their earnings transcript, right? So I would say that this is the one. So they talk about like they start to deliver some high NA EUV. Actually, this is the one that is even more expensive. And then in terms of the capability, in terms of what they are able to do, right, is also a lot more advanced, because high NA means that the aperture is even larger, right? So they are able to print the circuit or the weight on the wafer in a even higher or better resolutions. So this is definitely more advanced. The thing about high NA is that right now, right, it's kind of like at the testing mode. So when they are doing all this testing, they deliver a couple of machines, and then on their customer sites, for example, like TSMC or Samsung, right, they are also doing a bit of testing. It's not like high manufacturing kind of usage at the moment. So when they deliver this kind of machines, and if you look at their gross margin, at least currently it is positive, but I believe it is more like a break-even positive instead of like high profit margin. The reason is because the fixed cost is high when you divide it by a small number of machines that they delivered, right? So they are not able to generate a lot of like gross profit from this kind of high NA EUV at the moment. But the management also mentioned that as soon as they ramp up the production, which they expect in around 2028 to 2029, right? So when they deliver many machines, the gross margins will increase, and then it will be a positive to their margins. So I think these kind of things, right, is like if you just look at short term 2025, 2026, right, I don't believe it will be like much higher kind of growth rate. But if you just look ahead a few more years, right, we are talking about 2028 and 2029, right? So you notice that these companies, right, their sales, right, will probably close to double in size just for these kind of things, especially when it comes to their profit. As long as they deliver these kind of machines, and then the capability is there, they are able to charge like hundreds of millions of euros. So it's a matter of like volumes, because once the volume goes up, right, their profit margin will follow, and then the free cash flow, everything else will follow. So in terms of financials, you just need to be, hold it for the long term. We are talking about like 5 years kind of horizon, right? Then you will see a nice ramp up in terms of revenue, profit, and so on. So then share price will follow, right? That's the things that we are looking forward to. So that's about ASML. Let me quickly cover TSMC. So for TSMC, right, just a recap, right? So TSMC, they only do the foundries, meaning that they only do the manufacturing, the fabs of the chips. So they are the one that print the chips, right? So they work very closely with those on the right hand side on the design. Say for example, companies like Apple, Qualcomm, AMD, Nvidia. These are their customers. So they provide the what to print in terms of like software, the mapping, right? Then they take that and then they just print it on the wafer. So that's their jobs. TSMC definitely is the largest one, and they also compete with companies like Global Foundries, UMC, SMIC. But the rest is very small. So TSMC, I think in terms of the market share, is about 70%. If semicon industry down, TSMC will down. So given their size, right, they are the industry already, right? So I think that's about TSMC. Then in terms of the entire ecosystem, you can see that ASML is the one that provide the equipment for the manufacturers. So aside from ASML, you have Lam Research, you have Applied Materials, which I haven't covered in the past because I also haven't read all these companies. But in terms of lithography, only ASML. But all these equipment manufacturers, it's not just lithography, right? There's a lot of other stuff, right? Like even if you want to talk about the input, who provide the gases, who provide like the clean rooms. So there's a lot of like many other companies that's involved in semicon industry. But I only focus on ASML because they dominate the lithography. And when it comes to foundries, I only focus on TSMC because in terms of the advanced chip manufacturing, right? Actually, that's the segment that's still able to generate very high profit margins because there's no competitions, right? So TSMC dominate that portions. That's why I only focus on like the highest qualities companies, which is these two. Of course, on the design side, I invest in Nvidia, Apple, Amazon, Google. So those are not just chip design companies. Some of them have other business as well, right? TSMC, just to let you know that where they are sitting in terms of the entire semicon industry. Then in terms of the financial numbers, you can see, right, for companies that they are able to dominate a segment for TSMC, which is the advanced chip manufacturing, right? So they have pricing power, and then from pricing power, they have good margin. And from good margin, it's very easy to see, right? If you plot this kind of chart, right, you can see that in terms of revenue, they are receiving 33.1 billions in one quarter. And out of that 33 billions, right, 15.1 billions actually flow to net profits. So you can see that the net margins is extremely high. But just for TSMC, their business, later we'll look at the capex numbers, right? Not all of these net profits will flow to shareholders. Actually, still quite a sizable portions of all these net profits, right? They will flow back to the companies in the form of capex. So they need to buy all these equipments and expand their business for the next growth, right? Next wave of growth. So they can't skip that. They have to do that. So So that's why if you look at the profit margin, $1 of earnings for TSMC is not the same as $1 of profits for ASML because of all these demands to reinvest into their business. So this one I also repeat quite a few times already. So let's look at the financials. So in terms of financial revenue, up 30%. This is great numbers, right? That's why I also congratulated my Telegram group. So for those who invested in TSMC like me for a number of years, you can follow the trajectory of the business, right? From their small now become a lot larger. Revenue up 30% year over year. This is definitely good results. Earnings up 39% year over year. So again, so this is you can see, right? The revenue grow and then the operating leverage kick in. Then you see the earnings growth is even higher as compared to their revenue growth, right? So earnings numbers definitely fantastic. Free cash flow down slightly, down about 21% year over year. But when you look at free cash flow numbers down, right? Two things you want to pay attention to. Number one is that whether the operating incomes or let's say the cash flow for operations coming down, is that the reason, or is it because the company have to spend a lot on capex? So the first number that I look at is definitely capex. So if you look at capex numbers, right, year over year is up 45%. I think this is not new. Actually, the high capex numbers, right, is already happened last quarter, 2 quarters ago, 3 quarters ago, right? So I think this is somewhat positive in a sense of when you see they spend a lot in capex, a lot higher as compared to in the past, right? That means they see there's decent growth or high growth in the future. So they need to expand their operations now. They need to build new fabs, whether we are talking about the fabs in Japan, in US. So all of those, right, they need to spend money. They need to buy equipments, right? So capex number is a lot higher as compared to 1 year ago. So I think that's good because of the higher growth in the future. So nothing concerning here when we look at the free cash flow. In terms of the PE, right now is at 20.2x. I would say that similar to ASML is quite reasonable. It's not far from, let's say, like 5-year average, right? So I think it's reasonable. But a lot of caveats when I say it is reasonable, right? Because the caveat is that you look at 20x looks good. It's because the earnings has went up a lot, right? Then the question is that can they sustain this kind of earnings? Because if you foresee that right now it's already at cycle peak and then earnings will come down later, right? So 20x PE you buy now, let's say if the earnings come down in the future, right? Then you are actually buying at 40x, 50x, right? So that's why the earnings part, right, is the one that is harder to predict, but you need to be aware like right now the earnings is a lot higher, but you are buying at 20x today. So if you ask me, for me, because I already have a decent allocations, that's why I haven't been adding to TSMC for quite a while already. I'm comfortable with my allocations. For you watching, maybe you are new to these companies, you are thinking of whether to buy or not. So I think these are the caveats that I think is important to consider. So that's just quickly looking at valuation. Then in terms of revenue by technology, you can see, right, on the right hand side, they break down in terms of their what is the nodes that they are selling, right? So there's a 7 nanometer, 5 nanometer, and 3 nanometer. And you can see that the 3 nanometers, right, they started around 2023 third quarters, right? Already started these 3 nanometers. So it was very small back then started to ramp up. Of course, fourth quarter of last year, it was quite high. I think all this mainly came from the Apple orders because as their new iPhones launch, right, they always have to come up with all these chips. And I believe most of those came from Apple. And then now you look at the third quarter of this year, the 3 nanometers result is also looks good. And I think the Nvidia one right now, they are still selling the 5 nanometers. Even for Blackwell, it's still like, I think they call it 4 nanometers, but it's actually belong to the 5 nanometers families. So that's why you see that the green one is also growing, right? All this, whether you call it like the 7, 5 or 3 nanometers, these are all advanced nodes. These are not like those matured nodes, right? Matured nodes are those like, let's say 28 nanometers, 65 nanometers. Those are the matured nodes. Matured nodes, they don't have much margin one because it's relatively easier for their competitors to do it. That's why not much margin. The margins is driven by all these advanced nodes. You look at all these numbers. What's the key point here, right? Showing the 3, 5, 7 nanometers, right? I just want to remind you, like when we talk about like owning a business, owning it for the long term, right? I think one thing is quite satisfactory. It's not just about like looking at the share price or looking at their revenue numbers, right? Sometimes it's looking at the company from kind of like not so advanced, and then slowly they ramp up something that's a lot more advanced, and then they grew over time, right? I think this one is quite satisfaction when looking at this. It's like watching a baby used to crawl, then now start to walk, right? So just a recap, right? When I invest in these companies, I think I invested in July 2020. Back then, the numbers that it was available was only the Q1 2020. So that was the first bar in this right hand side chart here. You can see that back then they don't have 5 nanometer at all. It's only 7 nanometer, and 7 nanometers is already considered advanced nodes already. So then you can see that their 5 nanometers just started ramp up around third quarter of 2020, right? Then you can see that the red columns start to go up, right? Over many quarters, right? Right now, 5 nanometers become like the matured nodes already, which is the green color here, right? Then they have the 3 nanometers, and you can see 3 nanometers also going up already. So now they already started to talk about the 2 nanometers, which is another new families that's upcoming, right? So that one will take another 2 to 3 years to grow to a much sizable portions, right? You can see, right, companies that put money into R&D and then come up with new nodes, and then because the new nodes only they are able to do it, other people's not able to do it. So there's margin, there's moat around all this advanced manufacturing, right? So you can see you need time for all this to play out. It cannot be, oh, I think 2 nanometer is the next thing, right? Then you are just looking forward to one thing, right? You need to like stay with the companies and see them slowly growing and growing. In terms of the how advanced they are, is also like they grow. Like 5 years ago, TSMC versus today's is very different. Their mode is even higher right now, right? So that's why I say invest for the long term. Don't just enjoy in terms of like how much you can earn, right? You should think of like how you enjoy in terms of looking at the companies that expand, in terms of their revenue, in terms of their technology, in terms of all sort of things, right? So I think I'll say that for those who trade around, they in and out, right? They don't have this kind of feeling, right? So that's why for me, I would say that promote long-term investing, stay with the company, and then just watch them grow. I think this is definitely a lot more important, and I encourage you all to do this. Okay, in terms of the earnings transcript, right, I will just mention one thing, because quite a number of all these analysts, they keep on asking the management what they think about the guidance for next year, and then they say, no, we are not providing guidance for next year. We will provide that the next quarter, which is next quarter, right, 3 months from now. But when talk about AI, right, they did mention that the CAGR for upcoming, I think they are talking about like up until 2029, right? So they are guiding mid 40%, meaning that 45% growth, 45% CAGR from now until 2029. That's 4 years, right? So this is what they are guiding, and the analysts also ask them like, well, how do you know about all this, right? So the management, right, let's say like CC Wei, right, he mentioned that they are not just talking to their customer, so referring to Nvidia, right? Not just Nvidia, they also talk to the customers, meaning companies like OpenAI, right? So because companies like OpenAI, they when they talk about like big numbers, right, I believe many companies they're also skeptical, like, wow, are you sure? Keep on showing all these big numbers. We also don't know whether it will play out or not, right? So they also need to talk to the supply chain and give more evidence that, oh, this growth is definitely coming. Although today's our revenue is only, let's call it like what, 13 or 14 billions, right? We will hit 140 billions in next few years, right? So they need to come up with more convincing data points and stories to tell all this, the entire supply chain, right? Then only they will ramp up their capex to meet their demands over the next few years, right? So definitely good news here. So for those who talk about like AI, whether it's in bubble or not, so I think these are some of the points that at least based on what TSMC mentioned, right? They believe that it will be 45% CAGR for the next 4 years. So you want to call it bubble or not? Then the question is, will this 45% CAGR play out over the next 4 years or not, right? So I believe this one will play out. That's why I stay invested. But whether I will bet on this and then all into a companies, to me, maybe not to that kind of extent now, because I already have some stake into the company, right? So I will just hold and then just ride along with this AI wave, right? So I have companies like Nvidia, TSMC, ASML. I have all these companies. Definitely, if this wave play out, I will have a good returns from all these companies, right? But if let's say we have a downturn, is it like a big deal to me? No, right? Because downturns means that the share price will crash, and then share price crash always means that opportunity to buy. So that's how I process all these things. I don't get panic for like some volatilities, because I mainly I'm watching all these fundamentals and not the share price, right? So for long-term investing, definitely look at all these fundamentals. If you have no clue on the fundamentals on all this supply chain, right, then if you just look at share price, to you like that thing is like just volatile, just like don't know why, like they keep swinging, right? But if you understand the business side of things, then it's a lot easier to process anything that's coming. That's on my presentation. Thank you so much. See you in the next one. Bye bye.